What's up, guys? I'm a little tired today. Probably could have slept a little bit longer. I since kind of getting off of this medication a few months ago, I've been getting back into working out and stuff, but I never pushed it much past like a half an hour, and at least for like weight training. And I just been using the gym right up the street. And so today, which is Saturday morning, I think it's actually the day before Halloween. So happy Halloween, everybody. I decided to drive out to the Planet Fitness where I am still paying for a membership, even though I haven't been there in over a year. I've been paying for a membership. So I was like, well, let me go back and check it out. They actually just renovated it too. So, it's got new floors, higher ceilings, a brand new bathroom. It's pretty awesome. And that was another reason I wasn't able to work out there, because they were, renovating it. But so I went to the gym and did like an hour. And I'm still feeling that shit. I'm just not used to it. Since, I'm going to be 35 soon, in February. I do kind of think it's a little bit tougher for me to go as hard as I used to go when I was like 26, 27. But maybe it's just because I'm a little out of practice. Maybe it's because I've been held down by these demons the past few years. So yeah, I just wanted to check in with you guys real quick. Obviously with the markets closed this weekend and being Halloween, I'm definitely going to be just enjoying my weekend, but there's a lot of things I'm looking at, watching for. Obviously on Monday and Tuesday is when the Fed is going to release their interest rate hikes. That's the big date. So it's probably going to be another 75 basis points. Definitely won't surprise me if it is. I'll be surprised if it's less than 75 basis points. I will be very, very surprised. If you saw some of the price action on Friday, I mean, like, look at Apple. Apple came down and went right back up. It looks like the rally could continue, but there could be this delayed effect. Okay, this is what I want to kind of discuss real quick. Is even if they hike the interest rates up by 75 basis points, let's say it's a whole percentage point, okay, which that might be a little surprising, but it's not going to be completely shocking. I do think these unprecedented moves by the Fed, this is just the moment of time that we're in. This is the time period that we're supposed to be living in. That what is there a better market to, have a financial awakening, or to become more aware of finances, investing, economics, macroeconomics? I don't think there's a better time to be doing this. So I'm excited for it. I mean, even if there is this delayed effect, let's say the rally continues into the next week, maybe it continues into the midterms, but you have the November rate hikes, right? There could be this delayed effect where you don't really see the fourth wave of the crash until December, maybe after December. I heard this one idea today about how the decline could go on into 2023, right? And maybe we don't see, and that would not be unprecedented. That would not be, right now we're just in an average bear market. If we win a whole nother year, right, it might be among some of the worst declines, but even that still wouldn't certainly be the worst. So I'm open to, both sides, right? That's why I have the long exposure, but in case that doesn't work out in the short term, I'm prepared to just try to keep stockpiling cash and try to acquire more of these assets, especially if they go south from here. I want Google at $75, I guess that's greedy, but that's where I think I would buy Google is at $75 right now. Would I put on a share or two? Maybe. Like, I've got one share of FedEx that I bought it, I don't know, around, it was right after that big crash. I think it was like about $150 or so, maybe less than that. And I haven't added any more FedEx. I would like to in the future, but, this is a long-term thing. This is one thing Peter Lynch, right? I watched a lot of Peter Lynch videos, and one thing that really sunk into me was when he talked about, not being in a rush to buy stocks. There's no reason to rush it. We got plenty of time to average into this thing. Now, that being said, The last thing I'll talk about is Fintech, because, for the size of my account and the size of my modest net worth, I'm very heavily invested in Fintech. And I'm involved in it, right? I'm constantly trading PayPal or Square. So my point about this is it possible that the Fintech companies and some of the smaller caps, maybe even like Palantir, right? A company like that, is it possible that those have already bottomed? This sort of bull flag we see forming with PayPal, at least on the daily chart, is very, very interesting. And the price action from yesterday and the fact that the candle closed green on Friday really makes me wonder. I think PayPal's got a good chance to shoot for 100 again. Now, does it get kicked back down at 100? That seems to be where the main supply source is, right about at $100. But yes, I think it's possible the Fintech companies already did bottom, and that at least we'll get sideways action with maybe a hint of upward bias over the next, until the rest of the market kind of catches up. That's my theory. That could be way off. It probably is. Let's see in a year from now how that pans out. But that's sort of how I'm playing it. I would like to buy SoFi again for under $5, but who knows if that's going to happen. So right now I feel like as long as SoFi is under, $6.50, these are pretty decent prices compared to, where it was 6, 7, 8 months ago. All right, with that, I'll leave it there. Keep it short. Until next time, I'll see you guys on the next video.